Hello, I'm Montoya. I'm the general partner of NuMundo Ventures, and we back exceptional Latin American founders focused on fintech, prop tech, and supply chain.
Hey everyone, thanks for tuning in and welcome to the VC Architects, the podcast where we share the real stories behind new VC fund managers and the blueprints used to make them successful. My name is Vlad Cazacu and I'll be your host today as we interview Ivan Montoya, a friend and a ridiculously successful angel investor having backed Jeeves, Treinta, Alscore, Yumi, Cheaper Cash and more at the earliest stages. In this episode we go back to the Bay Area as it was in the 90s and follow the story of the man who became LATAM super angel. For more information about starting and growing your venture fund, including show notes, highlight clips, and exclusive scenes, follow us on Twitter and Instagram at the VC Architects, as well as on our website at thevcarchitects.com. This episode is brought to you by Flowlie, the number one choice for deal screening and network management used by hundreds of investors from 50 plus different countries. Now, let's dive right in. Ivan, such a pleasure to have you on the podcast. I really appreciate you accepting our invitation to discuss more about your background in NuMundo Ventures.
Great to see you again, Vlad.
I think we're going to have a very interesting conversation here. I got a chance to know you a little bit better over the past year, and I think you have a very interesting story into venture through this LATAM super angel experience over the past couple years, but we'll get to that in just a second. I'm curious to start this episode at the very, very beginning of your journey, the mid to late 90s, fellow immigrant moving to the Bay Area, experiencing the tech ecosystem in probably one of the most exciting times that has ever been. Tell us a little bit more about how the Bay Area was during that time.
Yeah, it's funny to look back on it in retrospect, but we kind of didn't know what was happening until maybe 2 or 3 years into it. But when I moved out, it was early September, late August of 2025. And I think Netscape had just gone public. And I was about to go to business school at Stanford. And I remember at the time, like, what is a browser? What is this mosaic thing, right? And I remember obviously the Valley had a long reputation and Sand Hill Road was already established, but it was nothing compared to what it is now. And what was more surreal was it was like a feeling of being in Hollywood if you're an actor, right? You would know somebody who got a part in a movie, right? And it's like, oh, they acted with Tom Cruise. Well, I remember talking to a friend of mine who was in the business school class, maybe two before me. And he's like, yeah, there was this guy in our class. Yeah, he was okay, whatever, but check out his company. I'm like, what is it? It's like eBay. I'm like, what's eBay? He's, yeah, it's going public. He's going to be the richest guy in our class, whatever. And it was just like, yeah, to him, it was like this random guy in his business school class. And that person ended up being this guy named Jeff Skull, who's done amazing things. But it was just magic was happening, right? And super exciting for sure. Very exciting time.
And I find it hard to kind of not get entrenched in this magic that was probably going on during that time. But I have a feeling you started angel investing a little bit later on in your career, not during the late 90s. So I'm curious of understanding your entry path into angel investing and making the move from an operator at Silicon Valley based organizations to actually an investor and supporting new founders.
Yeah. So there's probably two key things or a couple of key things. One is, look, the same way it is for investors that there's a power law, it's true as operators, right? I worked in a lot of companies, a lot of startups. There was a lot of high risk stuff. Some worked out, some didn't. But thankfully, one of them did, right? I was employee 20 at a company that ultimately ended up getting sold for $1 billion. And so that provided some liquidity, right? I was still working and doing operational roles at other startups, right? But at this point now I'm starting to swing more for the fences, taking higher risks, joining companies a little bit earlier. And in the middle of that experience, I did my first trip to Colombia in 24 years. So I'm originally from Colombia, but I was there in 1989, the summer that the presidential candidate that was leading was assassinated, and we left the country the next day and didn't go back for 24 years. And so this comes back again, another connection to Stanford. One of my classmates was a senator at the time. He invited me to come down. We go down. I remember thinking, Bogota was definitely better than it had been for a long time, but still not the way I remembered. And then we went back in 2018 when my eldest daughter graduated college. So we have 4 kids. So it was the 6 of us, my brother and his family. We went to Medellin, Cartagena, Bogota, and it was just like night and day. And I remember particularly Medellin was a very motivating experience. The energy level of the city, how beautiful it was, and just the feeling, right, of positivity. And so I got back summer of 2018 and called up a buddy of mine, Cuban American guy who I'd known since undergrad. He'd been the CFO of Atlassian as a venture partner at Excel. His name's Alex Estevez. And I call up Alex. I'm like, hey, Alex, I don't know what it was like to be in China in the year 2000, but I think Latin America's hit an inflection point. And I think the next 20 years are going to be very big in tech. We need to get involved somehow. We need to back founders. And he got a cold LinkedIn request from a founder in Colombia. And he said, oh, you're a Colombian. You need to meet Ivan. It's pre-pandemic. They come out to Menlo Park. I put in a 25K check. And there's more to that story, but basically that was my beginning. I had liquidity. I'd been wanting to do stuff. I think I'd been inspired. I don't think I've ever told anybody this, but I've been listening to This Week in Startups with Jason Calacanis since it first came out. So, gosh, 2008. I mean, it's been a long time. And he wrote this book, Angel. And I always remember thinking, like, that seems like that would be fun to do. And then when I invested in Pickup, I remember thinking to myself, maybe this is my window. Maybe I'd always want to do something in Latin America because of the violence and other stuff. Decided it wasn't right. Maybe the window had reopened. So that's how I got involved with angel investing.
Interesting. And for everybody listening, Angel is an amazing book. Everybody should read it if you're passionate about the space. Offers a very down-to-earth playbook of how to get started. I'm glad you mentioned that. It's interesting to hear that your very first investment was not actually based in Silicon Valley. So I'll have to ask this. What prevented you from starting angel investing earlier, being surrounded by the Silicon Valley founders and the builders throughout the late 90s and early 2000s?
Yeah. That's a really good question. I've never even thought about it. But the short answer, I'll tell you this. I mean, 2 things. One, you need some liquidity, right? So for a chunk of my career, I didn't have that. I think the second thing is I found as an operator, you're all consumed about your startup. It was very hard for me to look up and look around. I wish I had, right? But it's super hard, I think. That's why I'm always, I don't know if I'm amazed or horrified when CEOs do a lot of angel investing. As long as they're not spending a ton of time and they're sharing their wisdom, that's great. But I found it all encompassing to be at a startup. And I wasn't even the founder, right? But you just feel like you got to give it your all. So my guess is that's the primary reason. And then just inertia. I mean, this thing kind of came out of the blue and I was motivated, right? I think for me, it was, there's obviously a sense of pride in being from Colombia. And so there couldn't have been a better opportunity for me to get back involved in this part of or to get involved in this part of the ecosystem.
And we have this first check written from a seemingly out of the blue opportunity, a cold LinkedIn message, not even to you, but to a friend
Yeah.
of yours. And now you're saying, okay, there may be something here. I think this is my, as you said, window of opportunity to start marrying my background and my heritage in Latin America with the opportunity that I'm seeing, with some of the capital and experience that I've been accumulating over the years. So how did that one investment transform into almost 50 investments over the duration of a number of years?
So 2 things. So this is great. I have not talked to anybody about Angel. I think I got inspired by Jason's story with his investment in Uber. So that sort of opened my eyes to the idea that, you could get involved early and something incredible could happen, right? And so I read the book. I also did a lot of research on angel investing. So one of the founders of Benchmark Capital, Andy Ratcliffe, he's now the CEO, and I think he's a co-founder of Wealthfront. And he wrote a lot, or there have been interviews where they asked him about angel investing because Wealthfront, I'm sure people at Wealthfront might correct me if I'm wrong here, but a lot of the early clients for Wealthfront were employees at Facebook and other places that went public, had all this liquidity, and here was this tool to help them manage your wealth systematically. And so for them, a lot of those folks had liquidity. They could do angel investing and so on. And so Andy would talk about how if you're going to do angel investing well, he's like, you have to at least do 30 investments. If you only do 10, it's like you probably shouldn't get started, or you should be comfortable that it's all going to zero, because the odds that you are going to have enough deal flow and also expertise at that point are very low. So I knew that I wanted to do 30 plus investments when I started. However, and I knew I wanted to have a focus, right? I couldn't be a pure generalist. So I'm like, okay, let me focus on Latin America to differentiate myself and build expertise. But I just thought it was going to take me 10 years. So I thought I would do 3 or 4 investments a year over 10 years, and that's how I'd get to my 30. But the timeline got super accelerated for a lot of factors. But the biggest one was COVID, the pandemic. Just changed everything with Zoom and the ability to be meeting founders anywhere on the planet, not having to travel to Mexico City, not having to travel to Santiago, Chile, or something like that.
And at what point did you acquire the LATAM Super Angel title? At what point were you now one of the most active angels in the region, traveling to the area, meeting a lot of founders, and being one of the best networked investors in the space?
Yeah, it was gradual. There's a lot of luck involved, right? It's a combination of luck and hustle, is what I would say. So the luck part was as after I put in my check into Pickup, I was trying to find all these VCs who maybe would put money in. And of course, this was in the era where if they couldn't drive from Sand Hill Road to the company, they're not investing. But one of the investors, a guy named Gary Little, who launched a firm called Canvas Ventures and invested in MuleSoft and Lending Club and a lot of other really interesting companies, he said, you should talk to this guy, Peter. I hear he does emerging markets. This guy was Peter Livingston. So I don't know Peter. So I get connected to Peter from Gary. We chat, we get on a Zoom call. His syndicate ends up putting in 500K to Pickup. I believe that was his first syndicate ever on AngelList, or if it wasn't, it was very early, at least his first Latin American one. And it turns out that Peter went to business school with a bunch of other folks who've done unbelievable things in Latin America. And by no means is he specialized in LATAM. He does investing all over the world. But it turns out David Velez from Nubank, the Uribe brothers, who are Colombians, very prominent. La House is one of the companies that they founded. Dilip from Jeeves, a whole bunch of people. And so just by the chance that I got connected to Peter was huge. And so then Peter would introduce me either via AngelList or directly to other investment opportunities. And then the pandemic hit, and so I could have a lot more calls, right? And so I think the second Latin American angel investment was a company called Belvo, which is out of Barcelona, and they do open banking. So for me, it was like, oh, it's a plaid for Latin America. And then there was just a bunch of other ones that started to do really well. And in 2021, I decided to do this full time. I'm like, if I can do this for the rest of my professional career, I'm going all in. And so in 2021, I think I did 10 investments roughly in 2020, another 10 in 2021, got very involved in the entire ecosystem, all of the communities, accelerators. I got very close to the team at Latitude. And where the name Super Angel came from was I did a fellowship with them, an angel fellowship. And I got voted the super angel from the other angels in the class, if you will. And so I'm like, all right, well, I'm the super angel, right? And in the US, there was a guy named Ron Conway, who was, I think, the original super angel. So I think back in the early 2000s, he was the OG of angel investing in the Valley. And so I'm like, okay, well, maybe I'm the Ron Conway of Latin America, So,
And hence the title was acquired.
yeah.
It's by popular choice, which is the right way to acquire a title, never self-assuming it. But there's one thing to invest out of your own balance sheet, of your hard-earned money, through a variety of different things, including the exit, including salary and other investments that you've done. And there's another thing of investing other people's money and getting that fiduciary responsibility to someone else's capital, which could be a larger portion of their assets or a smaller portion of their assets, and you have to be respectful of both of those. So I'm curious, what was the genesis of saying angel investing is great, but I think this is the right time to be a GP and start NuMundo Ventures?
Yeah, so it was a slow buildup. I definitely did not anticipate doing this. It was a very organic process where I'm investing, and then some of the early ones, like it's a power law. I invested in this company called Jeeves, and that thing just took off. Another company called Foodology, another company called 99 Minutos, and these are all companies that have done really well. And so then some of the folks who are with me through part of the journey, either as mentors, like this guy Gary that I mentioned, Alex, who I mentioned at the very beginning, just started saying, "Hey, maybe you should do a fund one. Maybe you should raise a fund." And I started doing more research, kind of thinking through like, does Latin America need another fund? Is there a space for me? What's my edge? What's, all of these things that you need to think through. I think I didn't fully realize how much I just started an entrepreneurial journey. Like I didn't think of it that way, which was probably good in some ways. It's very naive, like probably many founders before you start. But for me, it was like, oh yeah, we'll raise X amount and then go from there. But my thesis very early on was that there was room for a different approach to early stage investing in Latin America, in particularly an approach that maybe is rooted in the Valley, right? And I'll just give you an example. And this is feedback I got from founders that really led me to start this. And I don't mean any disrespect when I say this, but Latin America is a very status driven society. And it's probably like much of the world, right? And you could argue even in the US, there's cities that are very status driven. One of the unique things about the Bay Area, especially the startup scene, it doesn't matter where you come from, what you look like. If you got a good idea or if your company has traction, people get excited and they want to support you, right? And as an operator, I've worked with young founders who are incredible, whatever. And so I always have an attitude of never underestimating anybody because you just don't know. You could be meeting the next Bill Gates, the next Mark Zuckerberg, the next Steve Jobs, right? You just don't know. But I think in a lot of the developing world in particular, that is not the way things work, right? If you meet with a wealthy person in Latin America, it's like, okay, who's this guy? Right? Maybe your family for 100 years has been at the top of the economic pyramid, right? And so there's just a different dynamic. Where did you go to school? Did you go to school in the US? Did you go to school here, right? Here it's like, I don't know, it could be a dropout, right? There could be whomever, right? And so I think what ended up happening is more and more founders are telling me that my approach was very different. The way I interacted with founders was very different. The way I did, essentially, I invert the funnel. I do my due diligence deeply and I help founders before I invest. And so I think it allows me to take risks, which many investors won't, in Latin America. And they're not blind risks. I've seen the founders operate. So I thought there was room for something a little bit different. And I also felt, we were just beginning to see the beginnings of the bubble bursting, right? And I felt that there was going to be a big gap at pre-seed and seed. And so at that point, I'm like, okay, it's time to go, right? It's like the second window opening, right?
And it's very interesting that you mentioned this different approach, taking a more Bay Area way of doing things that felt novel to the founders in LATAM. And I think some people may believe that once you say, well, I'm becoming more inclusive, right? I'm now willing to go beyond the status game and start treating everybody with respect and seeing that there's opportunity everywhere, especially in an ecosystem that doesn't have the same supply of capital that, let's say, the United States and other European countries have. You're pretty much just opening the floodgates to a lot of deals and a lot of opportunities, and probably to the point of being overwhelmed. So I'm curious, how have you approached just overall deal flow and deal screening in an area where you clearly have a differentiated edge as a capital provider?
Yeah. So, that for maybe for many reasons has never been an issue for me in terms of getting obviously inbound, a lot of referrals right after having invested in over 40 companies in Latin America. my primary source of deals are other founders. And then the other positive thing, and then I'll get to your question about how I screen then, is thankfully a lot of founders say nice things about me. And so when I do outbound, I do a decent amount of outbound where I'll hear about a company through somebody else saying, hey, this company is really interesting. I'll reach out on LinkedIn or whatever way I have to connect with that founder, and it's almost 100% conversion rate. But to answer your question, it's a little bit brute force. I meet a lot of founders. Like my model is I take a lot of first meetings and I have a schedule on my calendar. It's almost like office hours for a professor. I just meeting after meeting after meeting. And I try to add value in the meeting. The way my meetings typically go is the first 20 minutes, I say nothing. I'm just listening, right? And then we have basically 10 to 15 minutes of what I would call professional brainstorming, where I'm engaging with them, whatever. If I can help them immediately, right? If there's something that I can assist them that takes very little, kind of a low calorie support, I do it immediately. But then what happens is, let's say I meet with 300 founders or 500 founders, whatever it is, on an annual basis. Maybe out of all of those meetings, I will meet a founder where the metrics are taking off. Like something looks really unusual. You see something like there's a signal of product market fit already. Or it could be a situation where there's a space that I've been looking to do something in for a while because I think there's an opportunity. And then I meet a founder doing something really interesting and novel in that space. I'm like, whoa, I think this could work, right? So then the funnel narrows, and I would say maybe 10 or 12 a year. I joke, I have a freemium product. I start to help them immediately. So with those folks, I get involved. Maybe we meet on a weekly basis, whatever the cadence makes sense for that founder. And I start helping them. If they're good to go, I start introducing them to other investors. Usually they need a little bit of help in polishing on the pitch deck. The pitch deck ends up being like a strategic document, right? It's not like a tactical thing. It's like the direction of their company, right? And ask a lot of questions. I introduce them to other operators here in the US. And then after anywhere from 1 to 3 months, I've got a lot more insight into the founder. I've got a lot more insight into the space. I've seen them operate. And we can see if there's a fit. Like, do they like working with me? Do they think I'm a pain in the ass? Do I like working with them, right? And then, if there's a mutual fit and there's an opportunity to invest, then I invest. So at that point, I have way more conviction. Obviously, if the founders like me, they want me on the cap table. I'm not really competing with other people at that point. I'm kind of an N of one at that point because I built that relationship and I've helped them for free. But typically, there's a big filtering process to get to that point.
And I feel like we're maybe going the unusual route on this episode, but how are you playing with other investors? And we'll get the chance to speak about NuMundo Ventures in a second. But your role in the ecosystem, value first, helping those founders, getting them to a point where you feel they're investable because now you're ready to put money in, but there may be other investors around the table. What's your role in the larger venture ecosystem from a co-investment perspective?
Yeah. So I'll talk a little bit about the fund, maybe not super specifics, but I'll talk a little bit. This is a fund one, right? So it's a smallish fund one. So I am in no circumstance am I going to take up the full round ever. At best, I don't know, 5% ownership. And that would be if I get involved really early with a company with a very early valuation, right? So by definition, I need to help these founders raise capital. And so I'll give you an example. I invested in a company in January of 2022 at the time as an angel. So my check was about 20K. And immediately, like that day, I introduced them to two other investors who then put 400K 2 weeks after I did. My goal, frankly, especially at this stage, is to be the best lead gen for all the bigger pools of capital who are interested in the spaces that I'm in, right? I had a call yesterday with early stage fund based in Mexico. It's like $120 million fund. And it's just like, there was a founder of a company I backed from Chile. The founder's in Mexico City. And basically, I'm lining up meetings with all these investors. He's not doing an official fundraise right now, but he will be in a few months. And yeah, my job is to be great lead gen, right? I want to be signal to the Series A investor or to the pre-Series A investor, right? And that's another source of my deal flow, right? Because hopefully they have good results with the referrals I send them and they want more, and vice versa. If they see a company that's way too early, but they think is promising, they send it to me.
It's a symbiotic relationship the moment you lead with good
Yeah.
deals and good value. But I'm curious to understand from the perspective of you're now signaling to other investors that this is a good company. Signals, it's a very tricky topic because they may be perceived the way you want them to be perceived or maybe perceived in a different way. Are you sending introductions to other people before you make your investment or only after you made that investment? You have skin in the game in that opportunity.
That's an interesting point. I will do both, but it's almost always when I'm in some form of due diligence. And the reason I do both, there's some cases where, well, I shouldn't say some, in many cases, I bring in other investors to get their perspectives, right? Hey, what do you think of this company? Right? I really like X and Y, but I'm curious to hear what you have to think. And sometimes you disagree. There was a company I was with talking to an investor earlier today. They passed. He shared with me why they passed. I'm like, well, those are fair points. I hope that you look at them again in a few months and you still think they're cheap because they're kicking butt and, they've addressed the areas that you have concerns. So I will definitely make introductions, but I'm always explicit. I've invested, I haven't invested, whatever. But it's usually for companies that I'm excited about, right? And then there's sometimes you meet founders. This literally happened last week. At some point, I went to go meet a founder who's a 500 startups company. And I met this founder 2 years ago, Ecuadorian. And we'd stayed in touch and I did a deep dive, but ultimately he wasn't raising capital or whatever it was. He's in Palo Alto because 500 startups having some session in Palo Alto. He's like, hey, I'm in town, whatever, let's go meet. I take him out to lunch, and another person in that same group, a Colombian founder who actually is based in Miami, a company called Dapta. His name is Nico. He said, hey, can I join you guys for lunch? So I'm like, yeah, no problem. And we join, and he's doing this very technical startup with APIs, and it's not my area of expertise. But I know the founder of Platzi, or one of the co-founders of Platzi, a guy named Christian, and he is partnered with one of the engineering managers of Airbnb, a guy named Federico, and they do very technical founder-led startups. So I immediately reach out to Christian. We later organize an event the next day. I invite all the folks from 500 startups from LATAM to my house. We have an event. Christian says I'm there. Christian meets with Nico, right? And then I post on LinkedIn. Then I get this company, this one big $120 million VC firm is like, hey, I saw you met with Nico from Dapta. What do you think, right? And so and that's, I think, part of, I'm just doing it to be a good actor in the ecosystem, right? And I'm super transparent. Hey, it sounded really interesting, but it's not really my thing. You should take a look at it. It turns out there are like 5 other people I'm affiliated with. Hey, tell me what you thought of Nico. Tell me. So, it's I think part of how I do what I do, right? Just being positive player in the ecosystem, and hopefully karma comes back in a good way, right?
I was going to say one of our previous episodes, our guest shared that she's building a karma mountain every single day, and at some point, it's just going to come back, right?
Yeah, but that just as an example. So I'm helping that founder. I've not invested. I'm super transparent, but I'm doing it also because I think what he's doing is super interesting, and I want to get input right from other folks. So
Absolutely. And I can't believe we're half an hour into this episode and only now we're getting to NuMundo, but I want to spend a little bit of time on NuMundo Ventures in a few sentences or less. What is the thesis behind NuMundo Ventures, and how did you come to that realization this is a thesis worth backing and worth pursuing?
sure. So NuMundo Ventures invests in pre-seed and seed stage startups in Latin America that are focused on fintech, prop tech, and supply chain. And that's the core of what NuMundo Venture invests in today. There's a couple reasons why the focus and why, and specifically Spanish speaking Latin America. So one of it is just my personal journey. I knew as an angel very early on, again, I have to, credit, not in person, but, the input of people like Jason Calacanis and Andy Radcliffe. I knew as an angel investor, I needed to build an expertise in a few areas. And fintech, prop tech, and supply chain is a massively broken area in the economies in Latin America, arguably globally. There's a ton of friction, ton of things to do. But in Latin America, if you look at supply chain and mobility, I forget what it is, but out of the 10 worst trafficked cities in the world, I think like 5 of them are in Latin America. You've got the nearshoring, which was an opportunity back a few years ago. Now it's like a big deal. I saw a metric today that Mexico is approaching China in terms of exports to the US for the first time in maybe 30 years. Fintech, anyway, I'm sure people can do research, but there's just tons of opportunities. And real estate is, the biggest asset category just in general. And there's a ton of friction. You still have, there are rules where if you rent an apartment in Latin America, you have to get a cosigner who's not a relative, who basically says, yeah, Vlad is good for the money. It's like this archaic thing from 100 years ago because the credit scoring system and other things, it's a low trust environment. So there's all these things where in those 3 areas, there's just so much room for opportunity and for impact. And so those were, I said, hey, let me pick a few areas that are very big, that have big problems that could have a meaningful impact on millions and millions of people. And then over time, over let's call it the 4 years I was angel investing, I did a lot of investments. I met a lot of founders. I learned a lot of stuff. I met a lot of other investors who invest in those areas. So by focusing, it allows me to add more value, right? Both in terms of whatever suggestions or assistance I might be able to provide the founders, but also connecting them with other investors who can maybe add more value than I can. So I think that's a big thing. And then the other piece was what we discussed earlier today, or earlier in the conversation, which was I think that there's this big gap in, especially in what I would call overlooked founders. And overlooked founders, it's ironic because in Latin America, as a category, you would say, hey, that's an overlooked area, right? But even within Latin America, I think there's huge bias, right? And so I'm what I would call an equal opportunity investor, right? So, there's a woman, Daniela is one of the co-founders of Foodology. I mean, she has the classic profile. She went to HBS. I think she worked at McKinsey. She's phenomenal. And her metrics are incredible. I'm like super excited to back her, right? At the same time, I backed, as you know, a 20-year-old founder who never went to college. And at this point has raised, I don't know, $7 million in the last year. He's got a company that's approaching 4 million in ARR, cash flow positive. The guy's unbelievable, you know? So, I can do both of those, right? Because I think there's a different way to evaluate these early stage companies that we talked about, right? So.
Absolutely, and can definitely do a +1 on the founder that you mentioned. Truly, truly incredible story there. And you're right in the sense that like not a traditional background and requires a different mentality, a different investment philosophy to be able to accept that as part of the risk of running business in an attempt to find the next big thing, which is right, like we would call it the pure venture capital strategy, which
Yeah.
is sometimes forgotten by a number of people in the ecosystem. But we're getting ahead of ourselves. We're now at the point of Ivan has now a track record, has a clear investment strategy. There's market pull, and there's a lot of positive signals around him that say this is what you should be doing. This is worth pursuing. And now we got to the very first LP, the very first person who said, I agree with you, Ivan. Here's my money. Walk us a little bit through that first conversation and how did it happen? Because I think a lot of people think this part of fundraising as a GP is really enshrouded in mystery. And one of our goals at this podcast is to demystify a little bit that experience.
So I would say when you're raising capital for a fund, there are some parallels to a startup, and then there's some big differences. But I think getting the first LP in many ways is very similar to a startup, right? the first, it's like if you were to build concentric circles around your network. And obviously this depends if you were a spin out of a bigger VC firm, it might be different because you might be able to bring LPs with you, right? But as somebody who is an operator slash angel, I don't have the benefit of that, right? So even though I may have a reputation with founders, I actually have to build almost from scratch that reputation with LPs, and it takes time. So at the beginning, it's not that different than a founder launching a company. It's friends and family, right? And I call it in the world of venture capital firms, I call it really rich friends and family. It's like, so, it's people who've known me for a long time, and on top of that, they were part of this journey. The first LP was Alex, right? The guy who gave me my first lead for my first angel investment, right? Who knew I went to when I had the idea to do anything in Latin America back in 2018. And so, I reached out to a bunch of folks that I knew who were aware of everything that I've been doing over the last few years, who had mentored me throughout that process, and said, "Hey, you reach out, you have those discussions. It is different. I think you in the lead up maybe to the previous question talking about investing other people's money, for sure. But at the core, they're making a bet on you at this point, right? And so there's some folks in your network that are willing to do that, right? If you've worked with them, if whatever, right? And that's, I think, the common path for the first LP.
And how does it feel to now have to sell yourself as an investment manager rather than being on the other side of the table, investing and doing due diligence on others? Like, how has your story about your ability to pick the right winners changed throughout your fundraising experiences? You maybe got more comfortable speaking about that.
Yeah. Let's just say I learned a lot. I think one of the biggest insights happened when I was meeting with a fund of funds. And I don't know why this didn't dawn on me earlier, but they asked me for an investment memo. And that would seem like, that seems like a normal thing to ask for, right? But nobody had ever asked me that. And I realized, especially with a solo GP, but this would be true for partners or whatever if you have more than one GP, but ultimately you are the product. With a company, the founder or the management team or the team as a whole is part of the equation. And I have perspectives on how big of a part or whatever, but it's part of it. It's not the entirety, right? What is the product? What is the market? Whatever. But for a GP, you're the product. So the investment memo shows them, how does the product work? Like, what are the things you care about? What do you look at? Right. And so they want to, if they don't have the relationship with you, and so they don't have other data points on how hard you work or your thought process or whatever, they have to quickly form that. Right. And I think that's been both very interesting intellectually, but also humbling, because you realize, like, it's hard to short circuit that process, right? I've had single call closes, but that's the exception. Most of the time, it's like you got to build a relationship because you are the product, and you have to have trust. So I think that's different. And then the other thing I would say is, when you keep having to answer, what is your edge, right? At the beginning, and I probably still need to work on this, but it might be a little bit loosey goosey. And then at some point, you're like, okay, I got to be very crisp, right?
And was there at any point where you doubted if starting a fund was the right decision?
Not sure I've ever doubted. Like, I'm committed one way or the other. I'm doing this for the rest of my life. So it's happening, right? And maybe it's a smaller fund, maybe it's a bigger fund, right? So, but I will not, as the younger kids say, I'm not going to lie. This has been a pretty tough fundraising environment, right? And the irony is, I think founders of startups might feel this way too. It's like they have so much capital. You hear about dry powder and all this stuff, right? I mean, you're talking about there are a lot of wealthy people on this planet, and they're still wealthy despite everything that's happened in the stock market and so on. But they feel less wealthy. They feel less optimistic, right? And so they pull back, or they have to have allocation decisions, right? And we can get into all the theory of asset allocation, but it's been frustrating at times. The cool news is, I remember telling a founder once this about interest rates. It's incredible how quickly sentiment changes with liquidity and interest rates. And I'm not, I can't predict the future. If I did, I'd be doing something else probably. I don't know. Maybe I'm doing the same thing, but just with more capital. But interest rates went up, and then all of a sudden, just boom, everything ground to a halt. And now interest rates are flattening out. People are more optimistic. Nasdaq, S&P's been doing well for a little while. And so you're starting to see sentiment change. But as they say, I'm not going to lie. There've been times that have been tough. It's like, and you really empathize on the entrepreneurial journey that you're on, right? I think I did not really realize how much I've become a founder of a financial services firm.
I feel like this is a consistent message that we got across around the empathy towards the founder fundraising process from GPs who went through the fundraising process for their first and second fund, especially for those who had to build the LP network rather than inheriting it, as you mentioned, by being a spin out from a different fund, which is interesting to also see the other side of the coin. I do have one final question before we head into the rapid fire. Part of not being able to close a particular LP is the market, is their expertise in what you're doing, is their understanding, their connection or alignment with your thesis, and sometimes is the mistake of the GP. And not a lot of people discuss about it, but this is the podcast where we really peel back the curtain and discuss it. So our final question on the VC Architects is, walk us through one of the fundraising mistakes you did that really changed, they really taught you a lesson that otherwise you would not really learn it the same way.
Yeah, I would say I'd give two. One was, and it seems so basic that like I'm almost embarrassed to share, but I think at the beginning, look, I've got a fund focused on Latin American startups. That instantly makes me a niche among potential LPs, right? So I sometimes people will talk about fundraising with a dating analogy, right? And so I sort of figured, well, it has to be your type. Like there's got to be this mutual set of interest, right? And if it isn't there, right? And so I think I was much more passive, and let's call it an LP follow-up. It was more like, they met me, they heard my pitch. If they want to invest, they'll invest, right? And so I think there are probably many opportunities that either died on the vine or took a lot longer to close, or now I'm reactivating, right? Because you have to hustle. Like in the same way, like I hustle to meet founders, or I hustle to respond to them, or I hustle to whatever. Look, LP's got a million other meetings going on. That moment that you meet with them is the one time they're focused on you. And there's like a half-life after you hang up the Zoom call where they, maybe they're like, oh, this guy had this really cool story about he was an angel, whatever, and he's got a totally different approach. Yeah, that is unique. And then everything else fills up their day. And a week later, they're not thinking about you anymore, and they got other priorities versus, and I think I felt it, but I also got that advice from some other folks who've been through this before. I got feedback from this guy, Eric Bond at the Hustle Fund. He said he would have all of his docs ready to go in an email prior to attending the call. And as soon as it was done, he basically would make some customization to the email and press send. Because he was right. If you don't do that, it's an incremental 5, 10, 15 minutes to get that thing out. You go grab a glass of water, you go to the restroom. Before you know it, it's like that evening you send out that email, and every second counts. So that's a big lesson.
Very interesting. It's a very similar parallel to running enterprise sales and always be chasing and always be closing.
This is an enterprise sale. It's a consultative, long sales cycle. And if you were selling $1 million piece of software, you don't just like, okay, they'll get back to me. No, you're proactive, you're aggressive until they literally tell you, hey, I'm out, right?
It's a good analogy to $1 million piece of software, because at the end of the day, it is a potentially $1 million check. Regardless of their usual investing, it's still a large sum of money that people are going to be expecting some level of support throughout that sell process. Curious to jump really quick onto some of the rapid fire questions, maybe more about you rather than NuMundo
Okay.
Ventures, to paint a little bit more of a colorful picture of who Ivan really is. And we usually start with this question, which is, what is one thing that people don't know about Ivan Montoya that they should know about him?
I can name almost any song, pop music from the 80s in, less than 10 seconds, most of the time in 2 or 3 seconds. I'm like a
Interesting.
human Shazam for the 80s.
Wow. Okay, so someone must really did their homework throughout that period. Most recent book slash podcast slash article slash conversation that recently changed significantly the way you view the world or a specific topic?
Hmm. Wow. Well, I think so. I went on a very long run this Sunday, and I knew it was like 2 hour run, and so I needed a podcast that would last that whole time. And so I listened to an interview in Spanish of the founder of Rappi, Simon Borrero. So I got to listen to him for 2.5 hours, and I think I had preconceived notions around Rappi, and particularly around how fast they had to burn cash to grow that business. And so I think I had a mental model of who he was, and then after the interview, I had a totally different mental model. And I would say in a very, very positive way. Not that I had a negative view of him before, but I was very impressed, very impressed.
Interesting. I was really hoping you'd say that you binge watch the VC Architects from episode 1 till latest release, but we'll take this one as well as an answer. A person that you've consistently looked up to throughout your career, if such person did exist.
Wow, this is kind of an interesting. This is very hitting to the core. Um, well, I mentioned this because he's a very prominent person in the ecosystem. So I worked with this guy when I was at McKinsey in 1997, 98 timeframe, a guy named Rich Wong. And Rich at McKinsey was bar none, for sure, the highest energy of anybody I'd worked with. And there are a lot of high energy people at McKinsey. And the guy was incredible. And then he left. He recruited several of us to join him at a company called Covad Communications, which was an early provider of DSL technology, broadband. So back in the day, things were dial up. And this was the beginning of moving to broadband. And Rich was just phenomenal. And there were good times, there were bad times. He goes off, joins Excel, and has a stellar career there. I don't know where he is in the hierarchy there, but he's very high. He backed a company called Atlassian, where my friend Alex ended up becoming the CFO. And I remember being in the middle of all of that during that recruiting process. And no, the guy is phenomenal, and his reputation among founders. I read an article that the Atlassian founders wrote, and I don't know how much of your audience knows about Atlassian, but basically they launched a company where cash flow positive from the beginning. I think their market cap is 40 billion right now, and it's taken a big hit over the last few years. I think the founders, when they went public, owned 2/3 of the company. So talk about like amazing. And you see in the article what did we learn over the 20 years. There's the year they took the investment from Excel, and there's a picture of Rich, and it was talking about picking the right investor. And so I think in what I do, my aspiration is to have founders think of me the way founders think about Rich. So Rich would be the guy.
Fantastic answer. And last but not least, a long-standing tradition here at our firm and a lot of other organizations that we've been part of, which is ending the conversation with a moment of gratitude. And it's a hard question because you're only allowed to pick one, and we've only made one exception, but I'm not going to admit this publicly. One person that you would like to give a point of gratitude regarding your work at NuMundo Ventures, your work as an angel investor, or overall as a participant in the venture ecosystem, who deserves to be recognized.
Well, I will say an obvious answer first because I need to say it, and then I'll give you maybe a second answer. The obvious answer is my wife, right? Because this is an entrepreneurial journey. Maybe we'll just leave it at this. Like I've talked to a lot of other folks who've launched funds, and they have all said, make sure your significant other is up for it because it's especially fund one is so hard, and there's ups and downs and all this. And she has been an operator. She works in product management, and she's worked at companies like Coursera and eBay and Flexport. I mean, she's got hard work. And here I am, meeting with founders and largely having a blast, right? Whereas she's in grind out mode. So definitely my wife Hillary. So
Fantastic. My gratitude goes to you even for taking the time to join us on this podcast. Really, really much appreciated. I think a lot of people will learn a lot about your investing strategy, your investing style, but also the real opportunity that Latin America presents and the fact that there are people spending their time back in Latin American founders and hopefully building a better future for us also. Really much appreciate what you do and appreciate you taking 1 hour to share this story with our audience and the larger ecosystem.
yeah, well, Vlad, thank you very much. I think the way we met is the way I meet a lot of founders. Yeah, I heard good things about you. We reached out, we connected. So I'm just super happy to be on the podcast with you and help you in any way I can.
Appreciate it, and hopefully to have you again at NuMundo Ventures Fund 2, whenever that happens.
Okay. Thank you very much.
What a great conversation. If you enjoyed it, make sure to like and subscribe to our podcast and be on the lookout for a new episode in 2 weeks featuring another amazing fund manager and their story. This podcast was made possible by Flowlie. If you're a fund manager, angel investor, family office, or syndicate lead who receives a lot of deals or simply wants help sorting through the noise, create a free account today on Flowlie at flowlie.com. That's FLOWLIE.com, and get access to an AI-assisted deal screening engine and network manager that will dramatically improve how you work. Are you ready to take your investing journey to the next level and join hundreds of investors across the globe who use the platform every single day? Find the discount code in the show notes and sign up today. That's it for today's episode. See you next time.